Good evening, everyone. Uh, Today, I'll be making a summary of all the videos I have shared, and I hope you have all watched the video. I have watched all those videos myself. Forex is about buying or selling. Forex is about buying or selling. It is either you are buying, you go long, or you are selling, you go short. Now, before you can do this, you need a broker. A broker a broker is like a middleman between you and the market platform. A broker offers services like gives you an account that you fund the account, and then the account you can link it up with a trading platform. This trading platform is MT4. Now the upgraded version is MT5. For the course of these lessons, I'm going to show us how to trade on MT5 only, because that is the only platform, it is the most modern trading platform. So with these brokers, there are a lot of brokers. There are thousands of them. We have HFM, that is the one I partner with in Nigeria here. They come to you regularly for seminar. They do seminar for us in Rio, like they came in January. Before the end of this year, I think they will come again. When that happens, I will share the link. I will give us the information because I'm their partner. They offer services, a lot of services like uh, uh, apart from funding your account and linking you up with a trading platform, they have promos. They have their own products that they add, and a lot of them like copy trade, like this HFM, they focus on educational, because they say they have to teach you, uh, skilled you up so that you can do it by yourself. Now there are other brokers like Light Forex, like XNES, like a lot of them. The Reef specialize on synthetics, like the volatility, like what you are seeing here. What you are seeing here, volatilities, that is the reef. You may not find this volatility with HFM because they focus on majors, currency majors, and other currencies and crypto. A lot of them, there are a lot of instruments. So many of them, this one can offer this, and this one doesn't offer the same instrument. So that is the difference between them. And then their promos, products and services, a lot of them, products and services. So there are a lot of them. Uh, then before we move on, we have to know terms in Forex. There are terms, like in medical we have terms that we use, we understand ourselves. In engineering there are terms. In ministry there are terms they use, and for a better understanding. So there are terms here in Forex, like the lot size. You have to know this so that lot size can make you lose all your money in seconds, can make you gain a lot of money in seconds. So choosing lot size depending on the size of your capital is very important. You have to know what lot size is. Like in the reef I'm using, different instruments have their different lot size. So, but you have to take it to the list if your capital is not large. But if your capital is large and you know the risks you are ready to take, lot size there for you to make this this these settings. Then you have to know what PIP is. PIP is percentage in price. Percentage in price, the price movement. Moving one pip, you know how much you make. Moving down in one pip, you know how much you lose. Then sell. What sell is, sell can also be called short, like you are shorting the market. Buy can also be termed as long, going long in the market. Take profits. is if you put a pending order for any order, you need to set your take profit and your stop loss. Stop loss is to stop you out if the market goes against your prediction. Take profit is to stop you out but give you profit if the market goes in your favor. Stop loss is to stop you out, then put you in losses, but it's just the loss, that the risk that you are ready to take. You say, okay, I'm ready to risk $3 in so that I can make $5. I'm ready to risk $2 so that I can make $10. So you set it up so that if the market goes against you, you lose $2 instead of losing your entire capital. If the market goes for you, in your favor, you can make $10 and it will take you out instead of maybe it goes and then comes back and put you in losses. So these are the things you need to know. Then you have to know different trading sessions. That will take me to this trading sessions. There are different trading sessions. Like what we have here. What we have here is a Sydney. Sydney's start from these are locations, different can I say, is it continents or the different time zones of the world, and when their banks open. No, this Sydney is also known as Australian session in Australia. That means at night, that is 9 here. This 21 is 9 p.m. here. That is when their banks open. That is morning, early in the morning for them. And it closes by 5 a.m. This Sydney Australian session is in green here. Now, the Tokyo session, that is Japan, in Japan, Asian session, also called Asan, the Asian session, start by 11 p.m. and then stop at 7 a.m. This time between this 11 and 5, you will see a lot of movement, because of these two zones coming together. Now, another session, the London session, start by 7 a.m. Sometimes can be 6 p.m. Yes, can be 6 p.m. Another session start by this 7 a.m. London session and then stop at 3 p.m. I think this calendar here is in GMT. So we are 1 hour ahead of this time you see here. So if you want to correct this in our own Nigerian time means this Australian session start by 10 p.m. and then stop by 6 a.m. This Tokyo session start by 12 p.m. of 12. This is 12 a.m. and then stop by 8 a.m. This London session start by 6 and stop by 4. While the New York session, the US, start by 1 and then end at 9. If I'm because this is in GMT. So this one start by 10 and end by 6. This one start by 12 at night and end by 8. This one start by 6. This one start by 8. Sorry, this one start by, the London session start by 8 and then end by 4. While New York session start by 1 and then end by 9 p.m. So the best time to trade is between this 12 here, 12 at night, and then you should be able to exit that particular trade before this 6 a.m. Then another base time to trade is between this time that the London session and the New York session eh, come together by 1 p.m. and then you should be able to leave that trade before 4. So with this, you can please also make a research about this. Everything is out there. Any information you need is out there. Most of my lessons, learning, I do that on YouTube. Anything you ask, you will see there. You can choose one or two people there, follow their lessons, get a demo account, and then practice. I'll show us how to get a demo account, how to link it up with the MT5, and then how to practice. Then I would think this our lesson should come again before the end of the year. I will come before the end of the year. Then from time to time, we will just announce a trading session, maybe 2 weeks like this, 3 Saturdays, and then we end it so that information will keep refreshing our mind. So now, trading, like the terms I gave before, I will share this picture. Right, also look at it. These are terms like currency pairs, exchange rate. You need to know lot size, you need to know the pip, what pip is, to know what leverage is, to know what spread is, and then the core ask price, bid price is just buying and selling price, buy price, selling price. So let's move on. You have to move on. Then before you trade, market moves in only 3 ways. It is either the market is going up or the market is going down. It is either the market is going up like what you see here, or the market is going down like this one you see here, or the market is moving sideways. It's not going up, it's not going down, it's just moving side by side. Now, you can identify this easily when you get to the charts. And when it forms like this, you need to mark the highs here and the lows. And then you see lower high. Why this one is higher low is that it has not come down here to break this low, the previous low. Now you will see this easily. You will identify this easily. Then you see it goes up again, even beyond this high, making a new high, and then making a retracement. Like, okay, it will not just go up high. No, when it goes, it will come down, goes and come down. It means there is a power pushing this up. Then that power has wear off. So now it will now retrace a little because the energy that was here as way of it will come down a little, then it will gather another energy and it will go up again. The same thing with the downside. If it was high here and then you see the market came down here, it did not go up, it did not go down again. See, it will start going up, and then it didn't go up to these heights. See it go down again. So it shows that the energy that pushed this market down was high, but it couldn't push it beyond this level. So now the energy wears off. Now buyers come in and then push a little. There are buy orders here, so the buyers will come in and push it up a little, but the energy, they don't have enough energy to push it up and then pass this high, so they will fall again. Sellers will push it down again, and their order, I mean maybe the amount that they have could not push them beyond here. The buyers will still come up and then they push it up a little, Their energy, they don't have enough energy to push it beyond this high, and you see the market will go down again. So you will see this on a daily basis. You see this in every minute, all the time. Market moves either going up or going down. Then I will advise you only trade when market is going up or when the market is going down. When the market is moving sideways, please don't enter the market. Please leave the market completely, and maybe just observe when it start going up again. Because when it is moving this sideways, you don't know whether it will go up or whether it will go down. So if you enter this market now and it goes, maybe you sold this market and it goes up, you will lose your money. Or maybe you bought this market, it goes down, you will lose your money. So you just leave the market, let it do whatever. Whenever it's ready to go up, it will give you sign. You see these stages. When once you just you identify this one, okay, it went up, it couldn't go back down again to pass this low. You buy. If I'm buying this market from here, I will get out here in this next high, because you don't know whether this high is strong enough to push it down again. So if I just buy and then I get out here, then I'll wait again. If it passes this level and goes up here, I will wait down here and say, okay, I know it will certainly come to test this level again. Or I will watch, and then when I get a sign that it's not going so far, I will buy again, and then we go up. I will get out here. If the market is going down, I may not sell here. I will allow it to develop, to make these levels. This is just forming level here and making levels here. When it goes down here, I say it doesn't pass here and it's making levels here, it will surely show you that it's making level. It will start to the maybe 2-3 bar brought it here. You see the next third bar will be so small, maybe the fourth bar will be so small. You get a sign, and then market start going down. When you see a sign that the market will be going down again, you sell. It will bring you. For me, if I sell, I will go out here knowing that it may stop somewhere and then come back again and put you in loss. So you sell. When it gets here, you wait for it to pull back again, then you sell. This is the only two market trend that you should go in. If it's going up, you buy. If it's going down, you buy. When I go into the chart, I'm going to show you the time frame, because there are time frame. I will explain the bars, how they are forming, the candlesticks. I know the candle, I shared about candlesticks. Those candlesticks are like our bar chart that we had in schools. Pie chart, we used to plot pie charts, bar charts. They are just forming their information. They are giving you information, the time and the price at that certain time. So they're telling you at this certain those bars are telling you at this certain time the market was here, and the information, when the plot is and finished, you know the people that were in charge of that particular bar. Maybe sellers were in charge of that bar, it will show red. If buyers were in charge of that bar, it will show green. When I get into charts, when I get into that particular lesson, I will explain the bar charts. I will use the bar. I will use a chart, a live market to explain this, so that we can get it properly. So you buy when the market is going up, but make sure you get a signal. You analyze your market. You sell when the market is going down. Make sure you get a sign and you just know that it is going down and you are sure. And then put your stop loss. If it goes against you, you say, I'm ready to lose certain amounts. That is it. Please don't enter the market when the market is moving sideways. Leave it to give you that signal. Now, if the market is moving sideways, this is what you check out for: a breakout. You could see this here. The market came down here and bounced back like a ball, and then came here, bounced back to down. came here, bounce up again, not making any, not breaking this high, came here, bounce down again, not breaking this low. Now it goes up again, not breaking this high. You just see it well in a line. Then it came, if the market came down here and break down, you just watch. The market will come down, test this level, because this is a very strong support level. This level is called a support level. The up here is called resistance level. Shows that when the market goes up here, the price here resists it. So it comes down here and bounce back like a support. And like this is support level, very strong level. It means that buyers are down here. People are here ready to buy at this price. This price favors some people, so they are ready to buy here. Shows that when it goes up here, people are here to sell. People are just here to sell. They are just ready. When the market comes here, I'm going to sell this market. Breaking here means that the people, the sellers here, they are so strong enough. They too strong enough, the power here to break down here. And it means the market is changing to the downside. Now you see that it will come back to test this level and goes back down. Do you know where you enter? You draw your line here and wait for it to come back here. Maybe you put your stop loss above here. The market will come back, test here, and then goes down again in your favor. So that is the way market moves. Then moving sideways, if the market is moving sideways, sometimes it may not obey these levels. The market may come here, come down here, bounce back, and then will not really test this level. Comes down and may not really come down to this level. Goes up and maybe test this level again. Comes down and may not really test this level. The market is still moving sideways. Whatever. So that means whenever you are in the chart, you have to identify these highs and then identify these lows. These places are called zones. These are zones. These are zones. If you may wait for this market, to come back down immediately down here. But the market came and then move up again, and you say, "Oh, the market is going against me." No, it is a zone here. That is why you need to know how to read those signs, those charts. You have to know what those bars are saying, so that if you get a sign here, okay, the market may reverse from here, you can take your. But I said don't go in during when the market is moving sideways. It's also called range. It's ranging. The market is ranging. So you stay out of the market when the market is moving sideways. Now I'm going to take us to the market. Okay. Let me use this. Let me check this. Let me use this to show us few of the things I've said this evening. If you enter this chart like this, if you enter this market, please, I'm sorry, it's not showing well. You could see the market came down here and make a zone here. This is a strong zone here, and then later the market moves up down here, came down, tested this zone, went up. This is the highest of the highs right now. This high is valid until it is broken. The market comes up and break it and go up. Now the market came down from here to this support region. This is support region. This is a resistance region. This is support region. Came back here, did not break down. See, it's respecting this zone here. The market did not break down. It went up again and form another region here. This is a resistance region here. The market from here came down here again. Did not pass here. Stops here and then goes up again. This zone now is the same as this zone because it's not really far. But you can say this is a new height that we will respect for now. This is the low that we are respecting for now. Until the market passes here, we can say, okay, we have a new high. Until the market passes down here, until we say we have a new low. Right now, the market from here came down here, and it's not past this place. If the market pass this place, for sure the market will get down here. Let me get this line. I will show us how to go around this MT5. If the market pass that place, it will certainly get down here. The market pass here, it has respected here. It is the same place that is here. Respected it here, respected it here, respected it here, respected it here again, and it is currently here. This is a live market. This market is live. Now, I will say this market is ranging. Let me bring another line. This market is ranging. I can put this here because it touches three places. Here, touches here, touches here, and touches here. So now the market is ranging now between here and here. Let me show you where it's ranging from. The market is ranging between here. The market is ranging between here and here. But this bar, this is yesterday's bar. This is what happened throughout yesterday. That was Friday. Because this market is in a day, this bar is in daily. This is a daily bar. So this market, this one here is for yesterday. This one is for Thursday. This one is for Wednesday. This one is for Tuesday. This cross here. This is also a sign. Sometimes if you see this sign, shows indecision in the market. Shows the market may reverse up or it may go down. But in this point, the market came down here. Now see how weak this week here. Also a sign that the market may go up. Now, this is in a daily. Let me get to 4 hourly. Now, for the course of what I'm going to show you is that the daily bar is so strong. It gives you a very strong information. If you are trading, what I'm going to show you daily on a daily bar chart. 4 hourly is for you to go down and then see what is happening. 4 hourly is very strong. For this bar to take time and form in 4 hours, this is a very huge information. If I'm trading this market, if I want to trade this market now, I will buy this market. I will buy because this is an engulfing bar that has engulfed this selling bar. This is selling bar. This is red. This bar that is red is selling bar. This one is those buyers taking over. So in 4 hours, buyers are in control of this market. I will gladly buy this market because of this information. This is in 4 hours. So these bars you see here gives you information in 4 hours. It's telling you what happened in the past 4 hours. Now let's have a look at 1 hourly. 1 hourly is where I take my entry, where I know if I want to enter this market now, and then I get this bar in 1 hour. This is 1 hourly bar. This is 1 hour in the past. This is the past in the past 1 hour. Please check this time here. This is 5 p.m. This bar is forming now. This bar will end by 6 p.m. It means that this one is 4 p.m. This bar take a whole 1 hour, 3 p.m. to form. This bar 2 p.m. to form. This 1 p.m. bar. This is what was forming in 12 p.m. So now, before I enter this market, if I wish to enter this market, I have to wait for this high to be broken. This is the latest high that has not been broken. For this high to be broken, and then the market will come back to retest this high. It will go up, come back to retest because it has broken this, but it will come back to retest it for sure. That is when I will buy this market. But for now, I will not enter this market. I will keep I will keep monitoring and reading this information I'm getting. Then when I'm going to show us how to go around this MT5, because I'm going to show you how to you register with the broker and how to link it up with the MT5. I will explain this. This is a moving average. This line here is a moving average, and it is in 15 period. It means that it gives you information in 15 past bars. So if you count these bars, or 50, sorry, 50 bars gives you this. The information gives you, this line gives you information for the past 50 bars. So now what this line is telling you right now, it says that the pressure is down. And you could see the pressure is down. So this line is above it. So the pressure is down. If this line is below, like, see, this line is below, it tells you that the pressure is up. And it was up, this, you see, the market was up until it broke this line and came down. And the line stays up until this bar comes, until this market comes, break above this line. It shows the pressure is up, but for now the pressure is down. So, and another thing I will show is this RSI. RSI shows you, now you see the here and here, this 30. When the market comes to this 30, that is when you know it is overbought. Now, if I wanted to gamble into this market and then I saw this here touching this 30, if I bought this market, see here, it is exactly here. If I bought this market, I will get money from this bar only. But no, that is gambling. You have to wait for the sign. I have to wait for this high to be broken. I have to wait for this high to be broken and then retest it, to come back to retest it before I enter the market. Then I will exit the market in the next high. So when I'm explaining, I will explain all of this. Quotes, what quotes is? These are instrument. I will explain this. That is the chart that I was explaining. I'll explain this place is where you have your balance equity. If you have trades that are running, they will run here. This is a demo account. That is why you are seeing this. This is where you can see check your history. Everything that you have been doing, you can use calendar to check it, what you have been doing for the past 1 month. So this is a demo. Messages are just messages, so they are not, this is not important. Where you have where you stay more is here, the quotes. This way you select your instrument, the instrument you want to trade with, and you can add any instrument from here. So this way you have, if you have any running trade, they will show here. This way you have your charts here. So I will explain how to trade. I will explain how to trade before the next week Saturday. So with this, I'm going back up. You want to do your analysis, please start with the daily. Now if I enter this, if I open my charts now, the information I get, it will be information that was presented yesterday. Sellers were in control. The pressure is down. This 50 simple moving average is showing the pressure is down. So today, if I should have entered this market, I will only look for selling options. But it is ranging, the market is ranging, and it is almost here at this line that when it gets to, it bounces back up. I will stay out of the market completely until I get a sign that the market will be moving up. If I'm going to trade this market, I will not enter this market throughout today because it's just here. What I'll be looking for, I'll be looking for a bar like this, a green bar like this. I'll be looking for a green bar like this. And today that is Saturday, I don't think that green bar is coming. It may come. It may not be big, but until the day closes. And if I'm not satisfied with the information I get from here, I will wait till tomorrow ends. That is how I trade. Because I can't buy right now and I can't sell right now. The market comes here and bounce back. If I sell, I will lose money if it goes back up here. Then I can't buy because the market is already here at this place, which this line says it is down, and which yesterday says sellers were in control. So the sellers may keep pushing this market down. So I will wait for a sign that will tell me that the market will keep going down. I will enter. I will gladly sell if the market breaks here and then retests here. I will gladly sell because of this line is up. So it's very simple. When that session comes, that I'm going to show how to MT5 to register, get MT5, and how to place your trade. I will show us everything, what all of these are for, all these signs are for, and then how to go around this, all of this MT5, how to place your, how to buy or sell. This is where the lot size is. For some market, the lot size, see, showing rate means that you cannot go, cannot even be 1.0.1 self, 0.5. That is the least. You can, for this particular instrument, volatility 250, 1 seconds index. Then if you want to market execution, so I will come back here for the, so that we will use the length of this video. Please, every information you need are out there for you. They are out there. Any information you need. So you go out there, make your research about what I've said now. I'm going to center and focus on what I do. There are a lot of information, there are a lot of trading pattern, there are a lot of teaching, but all of them matches to, are you buying or are you selling? Are you in profit or are you losing? Understand? So I'm going to show you what I do on a daily basis only, but there are a lot of information out there. Please, this is a disclaimer. Whenever you are trading, it is your sole responsibility. Whatever the outcome of your trade is, it is your sole responsibility. I will never ask you for any money. Don't give your money to anybody to trade for you. If you want to do forex, if you want to learn forex, or if you want to trade, please get your information, be equipped, and then try to do it by yourself. I know there are people selling signal out there. I don't sell signal. Only information I will give you is what I do. And then you see it here playing out here for you. If you keep watching this for the next 1 month, just open this this app, this MT5, and just keep looking at it. You will see this information playing, and nobody will tell you that whenever this market comes here, come to this line, that it will sell. And nobody will have to tell you that right now this market is there's indecision in the market. It is like, should I sell or should I buy? But let's wait. So people like me, we are waiting. So I'm waiting for the right information. Only time I will buy this market is if I get this kind of bar, green bar here. Maybe it may happen tomorrow. I'm very sure this market, that green bar will happen tomorrow. And until that green bar ends, closes, stops, that is when you will buy. So for For now, I'm going to end this video. We have had a 40 minutes session. uh it is nice being your moderator. Thank you. Please go out there, get the information. Please don't make your deposit right now. You have to use a demo to practice first before you know. Okay, out of 20 trades I've taken in a demo account, I have win like 15. I have win like 17. Okay, it means that I have, out of 10 trades I have taken with demo account, I have win like 3. I have 70% success rate. Or okay, I have 50% success rate. You have to, and then you keep you keep refining your skills so that you get a better result over time. Before you can say, okay, I'm ready, you know by yourself that you are ready to go into the real trading. Thank you for now. Please, any question, I'm open to answer. We will keep this lesson till Saturday. Each day, I will drop information. Then I will make videos more like this because I'm going to show you the real practice right now. And then I would like you to also do it on your own. What? Do it on your own. It is not by force. You have the liberty to do it, or you may not do it, but you should be open to the knowledge and the information, because we are in a digital space right now, a digital world. Money is becoming more digital, and we have the era of AI. Crypto. Crypto is more coming to replace normal fiat currency. So this information can be part of your life. You just know, something is happening. If you hear someone talking about it, you should, okay, I have information, I have a little knowledge about it. That is my joy. That is the joy of this course. Please, again, register with Hot Forex so that you can have access to their seminar whenever they are coming to you, or the seminar that is holding online for 7 days. After that seminar, they are going to award you with a certificate. Please attend that seminar. Then the Reef, I will show us how to register with the Reef, because that is where you can have access to synthetics, not normal. They also have normal currency pairs, major currency pairs, but they have more of synthetics. So synthetics, why I trade synthetics is that events that happen in the world, like news events, holidays, doesn't affect it. Like right now, market has closed for the weekend. Like normal currency, major currencies has closed. If you click it, they will tell you market has closed. But synthetics are still, we are still trading synthetics over the weekend. That one trades all the time, throughout days, no time, no holiday. So that is why I go into synthetics, and it is only the Reef broker that offers that. So, but Hot Forex is the one I partner with in Nigeria, and they give you a lot of educational. Even in their app, they have a part of educational course there that you can watch their short video and get. I will show us that. I will show us on Hot Forex. So thank you again. Have a blessed weekend.